This is James Altucher of TheStreet.com TV. I'm here with Jim Cramer, former hedge fund manager and current New Jersey resident. So, Jim, I want to ask you about one of the issues that a lot of viewers of Mad Money have is not just what stocks should I buy, what stocks should I sell, but really kind of the mechanics of trading and investing. Like, and in particular, I know for myself, the psychology of investing is very difficult. Like, how do you deal with the drawdown? Like for you, what are the 3-4 techniques you use when suddenly a stock starts going down? I'm not even just talking about what you do with the stock, but just mentally.
Well, what I try to buy stocks that may have an enterprise value as they go lower. So in other words, let's take a stock like Eaton, downgraded today. I mean, Eaton has been buying back stock. Eaton has been doing a lot of things right. But if you bought it yesterday when it was up 3, you're down, okay? Well, I mean, what I try to do is first recognize whether Eaton would ever be of value if it fell 10 points from where I was buying it or 15 points. In other words, take a look at the ultimate downside. It's just a catastrophic decline. And when it got there, would you want to buy more or would you want to cut and run? Because something's happened. And the answer is that if something could happen that fast in the business, which, by the way, happens quite a bit in technology, which you very rarely see me average down in, then I am scared. And you want to have a factor of will you get scared by a decline? Because I factor in declines when I buy. Now, that means I'm investing. If I'm trading, I'm out of the stock within a point. One of the things that has always bothered me is that people think that the IBD method is right. The IBD method is to get out the moment things go bad. And I look at it as like things will go bad in the market, things will go bad in the stock, but do I like the company? And this is a very contrary way to invest now. But it is. I'm dealing with this one right now with Capital One. I think Capital One, as it goes down, the multiple gets lower. The earnings keep developing. At 8 times earnings, I'm going to win. At 7 times earnings, I'm going to win big. So what I like to do is start from the back, which is to say, okay, look, here's a $80 stock that I'm going to be buying, and at 65, I'll love it. Now, this was first explained to me by all people Larry Tisch, noted late net value buyer, who just went like this to me. He said, here's the pyramid. And at the top, we don't like it. And at the bottom, we love it. But we always think that we're buying at the top. So when we get down, we get bigger and bigger and bigger. So I would save my capital. My first buy is going to be really small with the idea I'm going to be wrong. And the best thing that happens is it goes down. But people just regard this as being so contrary. And yet there's Larry Tisch explaining it to a guy who's 29 years old about how this is how we made our fortune. And, that was emblematic to me, and yet it's still so out of favor. It's as out of favor as when he first mentioned it to me.
Well, how did you meet him? Was he an investor?
I cold called him.
Yeah?
I cold called him. He seemed like a really smart guy, and I called him, and I said, listen, can I come up and pitch you an idea? And the guy who covers him, who's now unfortunately passed away, was furious, and he tried to get me. He went right to Bob Rubin and said, this guy's poaching. And Bob Rubin called me in and he said, how dare you poach? And I said, I don't want a dime from Larry Tisch. I just want to meet him. And he said, that makes sense. And he called Eddie Spiegel, and he said, Jim just wants to meet him. You shouldn't ever prevent young, smart guys. You should never deter them from trying to be better at their job.
Well, a little story about Larry Tisch is that sight unseen, he had heard about a young guy in Omaha in the early 60s who was making money, and he just mailed, like in the U.S. Postal Service, a $100,000 check to put in Warren Buffett's fund.
Great. He did the same thing with Eddie Lampert at the same time he did with me. I ended up doing a lot of business with Larry, much to the chagrin. It was all funneled through relatives of his because he didn't want to get in trouble with the organization. But Larry is the guy who came up with my method. And now, I have to tell you, I don't usually talk about that. One, because I think I perfected a little more than he told me. But two, because he didn't like people to talk to him. He said, this is the way I do it. But, listen, it's just within the family. And I always think that the people who think that I have no rigor to it, if they only knew the truth, which is that one of the great fortunes of all time was built on my method.
Well, you're sort of suggesting that there's this difference between investing and trading in terms of the approach of dealing with losses. So, like, how do you...
The trading that I did was to generate commissions to be able to get the information that I needed in a pre-Reg FD environment. Now, people don't remember. Pre-Reg FD mean that an analyst would call the CEO at Avid, and he would say, wow, business is a little better, and then he would call me. Because I wanted him calling me and not Fidelity. This was a perfectly legal way of making money that is now illegal. that doesn't mean it was illegal then. It was legal then. It was under a homework exception in a case that was brought against a guy named Ray Dirks. It was this little footnote to a Supreme Court ruling which said that you can use what's known as the homework exception. And that's what I built my firm on. But it was mainly the trading side. And the investing side is where 50% of my gains came from. But I didn't talk about those.
Okay, well, Jim Cramer on dealing with losses. And this is James Altucher at TheStreet.com TV. Thanks.